Yeah, Kelly, I think the key here is we're finally getting a finish line, that the uncertainty on regulation has weighed very, very heavily as the price action dictates. At the same time, that uncertainty, if we're getting these rules put in place, that means we're at the finish line. And I think if we can confirm that over the next few days, the fundamentals of these companies are still very, very strong as we're in the Q2 earnings season right now.
Yeah, the CIO, I should have said, Brendan, of KraneShares. But regardless, so if what you're saying is true, why aren't investors starting to see the light at the end of the tunnel yet? This is just a relentless sea of red.
Well, I think it's the uncertainty that this ad hoc, almost whack-a-mole implementation of this regulation has really been very unsettling to investors. Markets hate uncertainty, and this lack of clarity, transparency. It's really weighed on the price of the stocks. At the same time, the earnings have been quite strong, Kelly. And so we think hopefully if we can get to this finish line, hopefully we can get investors back in these names.
And there's Tencent Music down 13%. Of course, they have concerns about their business model being affected by this regulation. Is it just one piece of legislation or regulation that we're talking about here? Or could there potentially be a lot more?
Unfortunately, we're dealing with anti-competitive practices, fintech regulation. We're also seeing user data, user privacy issues being addressed. Again, that's led to this almost whack-a-mole situation where you get done with a situation, then you're dealing with another one. And again, that's leading to this terrible price action. At the same time, we are seeing investors. We've seen almost $4 billion of net new inflow into KWeb. And we think that investors are making the right move by buying low, and hopefully we'll be able to sell higher in the future.
Go ahead.
One more, issue right now is I'm just curious if you think that the signs that China's economy is slowing are complicating people's desire to kind of get in and want exposure to some of its biggest names.
Kelly, most economic data is year-over-year comparison. So as we get further away from China's Q1 2020 quarantine, that low bar gets higher and higher. I think one element about the July data that did not get a lot of publicity is the severe flooding, the severe rainfall we've had in parts of China over the last month. That certainly dampened some of that economic data. At the same time, we're hearing chatter about more policy support just based on this rising low bar makes those year-over-year comparisons harder.
As we all focus just today inevitably on geopolitics and the projection of American power around the world, among other things, how do the tensions between the U.S. and Beijing over Taiwan figure into any of the sell-off and any of the future prospects for the Chinese market?
Well, I think the U.S.-China political rhetoric's been certainly weighed on sentiment for quite some time, Tyler. I don't think that because a U.S. pullout of Afghanistan means that we would have a similar type of policy to not supporting Taiwan. Japan said very similarly. If anything, the lack of involvement in Afghanistan would free up resources in the case of Taiwan. So I think it's sediment on the saber rattling going back and forth. It's unfortunate.
I hear you on that. I mean, I think Taiwan, certainly Japan, are absolutely different in the area of economic national interest than Afghanistan was. But at any rate, Brendan, thank you very much. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.